All right. Good afternoon, Boyd. It is our 14th episode of Turn Rows into Revenue. I'm JC Carroll, and Boyd, what's going on with the markets today, my friend?
Hey JC, how are you, buddy? We've kind of had a
Good, buddy.
rough spell after the Fourth of July weekend. Um, Last week we were up pretty hard on corn and beans, limit up in corn after the report. Thursday, Friday we kind of drifted around, and then we went home over the long 3-day weekend, and forecast kind of flipped a little bit wetter, and North Dakota caught some rain, Minnesota caught some rain. Seems like those rains have been extending most of the week through Iowa into Illinois. Forecast is still cool and wet for the eastern corn belt. The models kind of keep flipping back on the heat for like the Dakotas and Montana out that way, but we've got another weekend coming up here, so it'll be interesting to see what happens if we flip those forecasts again. But yeah, corn's been under pressure. I mean, we're back. If you went back last Tuesday before the report, we are probably 10 cents lower than that after a run up over 80 cents to the upside, and we've lost all that and a little bit more. Beans a little bit similar, not quite as drastic to the downside. We traded up close to 14, and we're back down to 13.20. The wheat market's still kind of just struggling, I think, under the weight of some of those rains in the spring wheat country, puts pressure on that contract. But the cotton really is just kind of the stable one. It had a rough day on Monday, but we've kind of recovered what we lost there. And Monday was kind of a big day commodity wide. You had crude oil down and everything else kind of dropping off. So, but yeah, if you look at the cotton chart, I mean, we're still just in a really nice uptrend from that last April, March, April low, and another secondary uptrend here. So we kind of keep holding that line. We made a high there was it last Friday? Or no, I guess it was overnight on Monday. That was the only market that was open in our markets and traded up over 88. So as long as we continue to hold that green line right there, man, I think we've got a pretty good chance at going back and kind of testing that 90-cent level again. So, but cotton news remains pretty quiet. We've had pretty decent export sales there. Export sales on corn and beans have been slipping. Export sales on wheat are actually pretty decent, but the crop that we've got or that we have harvested and are harvesting seems to be pretty good on SRW wheat or Chicago wheat. So we'll need some more demand there, and we're getting quite a bit of feed demand, especially with that northern crop being a little more subpar on quality. They've had some vomitoxin and falling number issues, so that could eat into some corn demand as we get into the third quarter here. But overall, markets are still at very profitable levels versus the last 4 or 5 years. So we've still got some decent opportunities here, but I think it's going to take either a big surprise from USDA. We do have a report Monday, but there shouldn't be anything crazy, or a shift back to a really hot forecast for the Dakotas. So again, I think you probably look at selling rallies in the corn market. Bean market's got another month, 6 weeks of weather. August rains make soybeans. So, but if that pattern continues to look like it's going to bring that northwest flow down, it's probably going to keep things under pressure in the grain market.
Now, Boyd, as we continue, through July, in regards to corn, a lot of that weather concern when we get rains, like what you're talking about, and just cooler temperatures and some moisture in those states that had question marks around them, like North, South Dakota, Minnesota. My thought is we're running out of time in potential weather concerns down the road. I mean, a lot of that corn is just getting made, and it could turn off, and we still have a question mark on some of it there. But our weather concerns, the further we move along through July, it's really gonna kind of answer itself, isn't it?
Yeah, I mean, you've obviously got a lot less question marks on weather than you did back at the beginning of June. So, and the pattern seems to be shifting. It's not quite as dry in some of those areas. Yeah, you still got some trouble spots, but as we move into the last 2 weeks of July, most of that crop's going to be pollinated. And that's part of the pressure, I think, here is not necessarily all the rainfall, but just the cooler temperatures. I mean, you look at the forecast up there, you've got highs in the high 70s, low 80s, and overnight temps in the low 60s. So, I mean, typically that's what you want as long as you got some water for pollination. So it should be really good from that standpoint. But yeah, like you say, the clock's probably ticking on a whole lot more drastic weather threats in the corn market unless something really changes in that North Dakota, South Dakota. But talked to some guys yesterday on a conference call, and anywhere from Nebraska to Wisconsin to Michigan to Ohio, everybody's like, we could use a shower. But I asked the question, I said, are we below trend, above trend, or at trend? And everybody said we had the potential to be above trend in those states. I didn't have anybody from the Dakotas on there, but everybody else said, yeah, this thing could probably be over trend if we have somewhat normal weather through the rest of the growing season.
It, throughout the Southeast, I feel like this tropical storm Elsa that passed through really gave us enough moisture, too much in some spots that were already wet, but for the most part, gave us enough moisture on corn to basically finish it out.
Yeah.
And you look at what it did for our other crops, and other than some tobacco in spots getting tossed around a little bit, I think that it was just kind of an exclamation mark on a pretty good corn growing year in a lot of places. And as I'm thinking about that through the lens of the Southern grower, I guess my thought is if I know what I have in the fields, barring a big hurricane coming before harvest on corn, I'm going to go ahead and start being a little bit more aggressive now, especially with the time ticking away on that question mark spots in the Dakotas and Minnesota. Just feels like we need to be moving forward on price and so on.
Right. We're 3 weeks away from seeing some corn in South Georgia, South Alabama, maybe 2.5 if you got a dryer. Basis levels are still pretty high for harvest, and I don't see any real problem areas. So if you think you're going to have more corn than you can store, it's probably time to get on the phone and start saying, hey, I got some August shipment corn. What do you pay me? Because we still got an inverse there and really good basis levels. So, it's one of those years where you move the bushels that you can't store before you store them instead of waiting till the bins are full and then shipping them out. So
that's right. It'll be interesting to see too. I've heard a lot of chatter about just moving that grain this year, that trucks are limited, and exactly how that's going to affect our local basis in the Southeast. I feel like it's going to could become a real problem when it's not just South Georgia, but when it moves through our southern states, and we're competing against other farms to start moving that grain. I think that transportation is going to get tight.
Yeah, it's going to be a disaster, and it has been. Seems like every harvest for the last 5 years, you just can't find enough freight. So, but yeah, take advantage of those early premiums, and then get those trucks early before they get busy, and then you can go to the bins and get those filled up. So, but yeah.
What else are you looking at as we move into the next week, boy?
Man, I'm still just kind of worried about this Chinese demand on corn for the new crop. It doesn't seem like they've been too aggressive, and I don't know. I think we talked about it last time. If they're waiting on a cheaper price, are they thinking that, well, I saw an article probably Tuesday or Wednesday that the Chinese farmer had planted another 6 or 7% of acres over last year, so at the expense of soybeans, because the price is what, $9.50 or $10 a bushel over there compared to,
Right.
if you put it on the same price as ours. So yeah, they're going to have more corn, assuming that they have a somewhat normal growing season. The USDA guy there in China, they always write a monthly report on what they're seeing, and they lowered 21, 22 imports from 26 million down to 20 million. The last 4 or 5 years, China's imported 7 million, 8 million. So it's still an
Right.
improvement, but just be wary that if they don't buy, you could have another 300 million bushels of corn sitting here in the U.S. And so your carry out, instead of a 1.4 or 1.5, is a 1.8. And you start to get, closer to that 2 billion bushel mark. I mean, it depends on what you want to throw in the corn market. How much of it's inflation? How much of it is weather? How much of it is Chinese or assumed Chinese demand? I think those are your 3 big things that you got to watch going forward. Bean market wise, I think it's going to be pretty well supported. The demand's going to be there. So the Chinese cannot buy corn, but they cannot not buy soybeans. So they've got to have that protein. Wheat, I mean, take a look at 22 wheat. We're hovering around that, 650, 635, 640 level. If that thing pops back up there, not a bad place to take some risk off. But, again, in the cotton, I think we can bounce back towards that 90 cents. But again, that's the inflation trade too. So it may not be all fundamentals in these markets as we move into the fall.
It'll be interesting in a year like this where it's kind of crept up, what the pools do in cotton, staple cotton and the others that are pooled prices compared to the guys that are, the gens or the individuals that are just doing it themselves. I always like to compare those numbers and see, what makes one better than the other. And we've definitely had some opportunity to price some, pretty profitable cotton here as we're moving forward. So, just another little piece of the puzzle to kind of review as we look at profitability across the Southeast. Who's doing better on that. On my end, Boyd, we've still just been learning a little bit about the Growing Climate Solutions Act, making sure there's really the rest hadn't been written on that plan, but it looks like they're putting the foundation together to try and reward farmers for limiting just practices that they feel like are going to hurt the environment and rewarding the ones that are no-till or double cropping. But I've been kind of peeking at Bayer's program. I feel like we're going to see a lot of the private companies roll out different initiatives for farmers to kind of lean towards them versus maybe whatever the USDA rolls out.
Right.
I don't know if you're going to be able to take advantage of a Bayer program and what is passing through the USDA, or if that Bayer program is going to take your acres in and then they're going to sell it through the USDA. I think it's important for our growers to remain cautious, let everything be written prior to signing up with any
Anybody.
of the private equity or private companies.
To me, that's the part
I did notice that in the go ahead.
Yeah, I was just going to say that's the part you got to think about it if you watch the news or you read the newspaper and everybody's talking about, Delta's trying to be carbon neutral by, was it 2030 or 2026 or something? And the amount of jet fuel that they burn, how much carbon are they going to have to buy to make that happen, or carbon offsets to make that happen? So just kind of look at it from a marketplace standpoint instead of just a well, they're willing to pay me X dollars an acre for my carbon. Think about the growth potential in that market before you really get down and sign on the dotted line, because it could be way better, or it might be what these guys are offering today. I don't know, but I would
Right.
just say be patient, because there's still a lot of, to me, it seems like there's still a lot of demand for carbon, and there ain't too many people in the world that can offset it like we can.
That's right. It'll be interesting to see kind of where that number falls. I mean, I think Bear was $9 or $10 an acre. We've seen the Indigo folks, what, 5, 6
Something like that.
bucks
Yeah.
an acre, and then you hear, what carbon's worth per ton, and trying to pull that number into what we do per acre plan. I mean, you were talking offline, is that going to be a $10 an acre number, or is it going to be a $200 or $400 an
Yeah.
acre number? I don't think that we're going to get to $400 an acre. If so,
No.
we might want to quit this thing and go grab some land and just farm some carbon.
Right.
I don't know.
Well, that's the
how they
other
would do
part
it.
to look at too, is I would be wary of those deals that lock you in for 5 or 7 years, or stuff like that. So that's all I'm picking up, and I don't have any inside info on what it's going to look like. But when there's
Right.
people out here willing to try to jump in front of it, big companies like that, it always makes me just a little bit nervous that they're either gonna try to steer the policy their way, or they know something that their lobbyists have been able to find out for them. So
The other piece of that's concerning is if they're going to pay us in agriculture for our row crops and what we're doing there, does it also ripple into perennials, and does it also ripple into just forestry? And if you look at that stuff with the and put a calculator to it, they're talking about the CRP plan being more lucrative to get full agricultural land out of row crop production and put it in trees. You throw a carbon credit on top of that. My hope is that it doesn't just pull all of our acres in the southeast out of
Right.
row crop production, and our landowners go stick some pine trees in it, because it's going to be
Made 'em more
significantly
money.
better for them
Yeah.
than what we could pay them in rent.
Yeah.
So the ripple there is kind of what is concerning, and it's one of those things that we're just going to have to wait and see how that's written, and how they get that information out. It's one that you can write anything down, but if nobody knows about it, then
That's right.
what good's it doing?
Exactly.
So well, that's really all I have on our end. I mean, we had a threat of hurricane. It didn't amount to be too much. I don't. There may be a county or two in the Gulf Coast side of Florida that triggered the hurricane endorsement, but I don't think that the amount of damage was significant there. And honestly, though, we felt that as it went through Georgia and the Carolinas, it was more significant than I had anticipated. I thought with a tropical storm in Florida that we might get a light breeze and
Right.
an inch or two, maybe.
Yeah.
Right. But I had some guys coastal South Carolina and North Carolina call us up and say, hey, I mean, this, it wasn't Hurricane Florence or Matthew or anything like that, but it shook us a little bit more than we had anticipated. So
it held on to its strength longer than I thought, because I mean, they had some wind gusts down here by me at like 85 miles an hour. So I mean, it really packed more of a punch and than what I thought it was going to when I saw the track. But that's brought some beneficial rain, especially if you're away from the coast. It seemed like that rain was 1 to 2 inches. It wasn't 4 or 5. So
that's right.
That was a good thing.
And in spots we could use 2 or 3 inches of rain.
Yeah.
It didn't hit us at a terrible time, and my hope is it did more good than harm
That's right.
for most folks. So, but Boyd, I appreciate your time today, man.
Absolutely.
You know, we'll be looking for you to steer us in the right direction next week as we continue to move on through the season.
We'll try her again next week.
All right, man. Have a great weekend.
See you, buddy.
Take care.